Uh, all right, what's going on, guys? Let me know if the audio is good. Audio check. And my bad. I was supposed to go live a little bit earlier, but yeah, just not feeling well, as I told you guys yesterday. Good morning, good morning. Perfect, perfect. Yeah, just been feeling a little bit under the weather, and usually, like I went to sleep last night after that gold trade. As I'm actually gonna, that's why I'm gonna go live to talk about this. Not gonna be on for too long, probably for like half hour or so. Um, yeah, but I just want to cover the gold trade that I posted on Telegram last night. And yeah, I mean, this was just a very, very good opportunity, to be honest, man. Like, this is why these are the type of plays that I usually like to wait for. So we'll break that down in a bit. Yeah, nice trades. Yeah. Yeah, man, it was a very good one. And I told you guys, like, I always, like, if you guys ever want to wait for an opportunity, whenever I post on Telegram, during the Asia session, I always trade from 7 to 9 o'clock p.m. Eastern time. Maybe sometimes, like, if I see something forming, I'll push it a little bit towards 10 because the 10 o'clock candle on the 4 hour time frame on gold on GC futures closes at 10 o'clock. And obviously, I'm pretty sure you guys can all see it staring us right in the face what kind of candle this is. So yeah, man. I mean, guys, this was absolutely textbook reversal play. And I'm gonna break it down in just a bit. Okay. I'm not gonna lie, I missed this one on NQ. This was actually a very nice play as well. But again, I was like sleeping in a little bit after last night's trade. I stayed up pretty late. Beautiful closure. Like I'm telling you, man, if you wait for candle closes above key structural points like this, right? The next candle, you can just anticipate the next candle to kind of have a retracement into a key level and then start to look for bullish price action to clear out and have an expansion move. Now, honestly, NQ right now, I wouldn't like touch it just because now we've taken out prior day highs pretty much fairly significantly, and we took out the Asian range high and the daily candle right now, we've kind of we're still at the top end of the range. Let me see if ES made a new all-time highs. Not yet, but yeah. And then gold, I think gold has a little bit lower. I was kind of targeting this daily fair value gap, to be honest. That's why I said hold a position, just in case we went to that first target pretty much straight off the first retest. I love when the market has that. This is the thing when you have a fair value gap or a retest. This is the type of price action you ideally want to see. Now, do we always see it? Of course not. But it's like you like to see the market tap into that area, reject, start to see bearish candles, bearish candles. You know, like when you start to see this momentum down, these are easy trades. Like enter and then just have the TP set. I never use the lows of swing lows only because I've noticed sometimes the rejection block, which is the bodies of the candles, typically will be the area the market has a reaction. And we did have a reaction, right? Look at right there, right? We had that reaction at the rejection block, right, on that candle before we took out that low, and we had a little bit of a retracement before we took out that low. So that's why I usually use rejection blocks. It's a little bit it's just more like it's just easier and less headache. So I'm gonna kind of break it down. So pretty much every single time, whenever I look for a trade opportunity, I'm looking for a couple things, right? So let's outline it. I'm looking for, and I'm gonna actually have them. So I'm gonna create a masterclass for you guys as well, so we could do a live session probably during the weekend, breaking a lot of different concepts down, as well as because I have a YouTube video coming out for you guys tomorrow. So, but the thing is this: whenever I look for a trade, right? Because I get this question asked very frequently. Keys to finding a trade, right? And I'll do this actually on NQ. I know some of you guys are probably like watching this, so I just want to have it on the chart. All right. Yeah. Let's see if we can actually have a nice expansion above this high, but we'll see. Usually if I don't get like the entry around here, right, I'm usually like, I don't like buying now after the market kind of has Asia range. Doesn't mean it can't go higher, but I don't know. It's like maybe a psychological thing for me. But, okay, so keys to finding a trade, right? This is very important, right? So what do I typically look for when I'm looking for the market to provide me with an opportunity to find a trade? Whoops, where'd it go? Let me just, actually, I'm going to put the hourly and the 4 hour time frame. Okay, nice. So the keys to finding a trade is pretty simple. I'm always going to look, number one, on the daily, weekly, when I start, especially the weekly time frame, specifically at the beginning of the week, right? When I start my analysis for the week, I'm going to use the weekly, but pretty much on every single day, I'm going to look for the weekly slash daily candle direction, right? Like, can I determine what the next weekly or daily candle is going to look like, right? So for example, like on NQ, when we were looking for the long yesterday, right, on the daily time frame, I was like, hey, we had a very strong move up in here, and I was looking for this candle to have an expansion above this high because we were respecting this order block. And then on the 4-hour time frame, we also had a 4-hour swing low being swept, and then a strong push and close above the prior high structure, right? So and now we also inverted this as well on the fair value gap side as well. We inverted this fair value gap. So on the 4-hour, we're showing bullishness. On the daily time frame, we were sitting inside of this order block, right? Even though we had this EBP candle, and then the market was showing me that this candle likely is going to expand higher to like at least to take out the prior swing structure, right? This again, this is also like today's candle, right? Today's candle would have been a nice one too, where you know that, hey, we have a strong close above the swing structure right here, the swing high. We have a candle closure above that swing high. So now the next daily candle, we can anticipate the power of three concepts. Simply put, we're just waiting for the candle open to drop down inside of this candle right here, inside this candle's range. We want to see, hey, if we go down to the 4-hour time frame, if we go down to the 1-hour, is there any clear structure? And we do have that, right? Inside of yesterday's range on Tuesday's candle, we have this beautiful fair value gap. We have swing low, swing high, fair value gap. The market has a beautiful daily profile, right? We sweep Asia range low into it, and then we start to have expansion higher. Nice, strong bullish candle. And then we have another strong bullish candle. And if you go to the 15-minute or 30-minute, maybe there's like a fair value gap inside there. Yep, fair value gap on the 30-minute being respected. And we have all this trendline liquidity. And we have, again, the swing high. So swing low, swing high, market retraces into a key level. We also sweep Asia range low, and then we have that push up. So that's why I like to find the daily candle direction, because you can look for a very nice big play. Now, number two, well, in order to find a trade, where are we on the higher time frame, right? Because again, the market could be bullish, but if the market is bullish and the market has been bullish, for example, let me just go here. So the market has been bullish, right? But the market has been bullish with like 3 huge green candles, right? Like this. Do I really want to continue buying the marketplace, especially if the market is hitting a key higher time frame resistance? Right at this, that's why I say, where are we on the higher time frame? Because sometimes you could have a bull, like imagine a strong daily bullish EBP, but we're above like a monthly high or a weekly high. Then it becomes, doesn't mean that we can't keep continuing, but for me it becomes less probable, right? I want to find the market as support, and then maybe when we get that first confirmation, then the next candle I'm trying to look for that next move up, right? Versus, okay, we're at a key resistance. We've had like 3 massive bullish days in a row, you know. The next candle could just be a doji or could be consolidation, you know. So that's why it's very important to understand where we are on the higher time frame. Okay. Now, number 3, we're on the higher time frame, H4 confirmation or H4 setup, right? I want to see a 4-hour setup, or at the very minimum, right? And the reason being is because I've tested this out significantly. Like on the daily time frame, when I have a 4-hour confirmation, it's way more, the combination just works a lot better. You can use the 1-hour at times for sure, but it's just sometimes a little bit better to have the 4-hour as well. Like for example, like this 1-hour on NQ, right? If we're anticipating the daily to be higher, we didn't really have anything on the 4-hour until just now, right? Like this candle closure, we closed above all this, but we're kind of already closed above like the swing high. Again, it doesn't mean we can't go higher, because we still have these rejection blocks in here, which is at 25,897s, but it's pretty much right there. Like if we go to the rejection blocks over here. So regardless, you want to see some sort of 4-hour confirmation setup. So this is what most people do. They look for the 4-hour and then they just try to like backdate this. It's like, no, sometimes you can just wait for the weekly daily candle direction and then identify where we're on the higher time frame. Now, what you could do, you can add on this one the 4-hour direction, which is something I'm going to be talking a lot more about this year, because you can anticipate the next 4-hour candle. Like let's say if you know that the market is going to go from one point to the next based off the 4-hour chart, you know, and you're only taking an intraday trading, just trying to find the direction for the next session, then that's all that matters, right? Like for example, if you have a 4-hour EBP as an example, and that 4-hour EBP, oh, sorry guys, I got a text message. Um, but we have a 4-hour EBP, for example, and then I know like if the 4-hour EBP happens at like a support level, for example, let's just assume that this is an EBP. Okay, let's just say that this is an EBP and then the market forms like, and then there's a clear like fair value gap that's present up here, right? And this candle closes as an EBP. Guess what? Now I can anticipate the next 4-hour candle potentially to have an expansion just to this fair value gap, right? Maybe the daily time frame is consolidating, whatever. I'm just looking for the market to have one push to the fair value gap, and that's it, right? That's when you become like more of an intraday trader slash scalper, depending on how you view those terms. So again, you want to see, so you could use a 4-hour direction, 4-hour confirmation setup, and the next thing is really just the time of the setup. So you guys know me. I'm going to always watch now, 7 to 9 p.m. EST. That's going to be Asia. And then New York Open. I'm pretty much waiting for the 4-hour bars to close, which is going to be 6 a.m., which to be fair, I haven't really been trading that at that time because it's just a little bit too early. 10 a.m., which is the more ideal time, and 2 p.m., right? These are the times of the setups that I know when the market is going to form. So if I know this, I'm not going to be wasting my time showing up to the charts at like 9 o'clock or 8 o'clock. I have to be there for the 4-hour candle open. So, and again, if you're trading FX, you just adjust these times to whatever. I think FX is 1 hour before. So it'll be 5 a.m., 9 a.m., 1 p.m. And then, yeah. And then for FX, 7 to 9 p.m. EST is also, this is relevant for futures and for that. Because again, look at the trade that happened last night. So now with all this in mind, right, let's go to the 4-hour time frame. Let's go to the, I'm sorry, the GC, right? Because I want you guys, oh, I'm sorry, I actually missed a key component. Where we're on the higher time frame. H4 confirmation setup. Yeah, my bad. I forgot to include this one. Some run on stops. Yeah, so this is like a non-negotiable for me. This has to happen. There has to be some sort of liquidity pool sweep on an intraday basis for me to go ahead and also, have better some run on stops with opposing level not tapped. This is like literally the key element to all of this, right? You want to see some sort of liquidity pool sweep with some sort of opposing level that's not been traded to. So if I'm looking for the market at support at a higher time frame and we see a 4-hour EBP or some sort of a liquidity pool sweep, we took out prior day lows, we took out weekly lows, whatever the case may be, right? I need that to occur at this level. And not only that, but then when I look, okay, well, where can I target? I have to see some sort of maybe fair value gap, equal lows, something like that on the marketplace to target. If I don't have this, then it becomes like you can still take the trade, but it's much better when you have like some sort of like fair value gap, liquidity pool that has not been traded to, that's very obvious and clear. This is what makes the setup. Now I'm gonna keep these rules here. Let me actually, you know what? Let me do this. Let me copy it. Because I want to have these set up this here while we go to gold. And we break down the trade last night. And look at that. That's why I said last night, let's hold a little bit of a position because this is probably gonna sell off going into New York Open. We did have a little bit of a retracement back into this fair value gap, which is a little bit annoying. But pretty much my stop loss on the account was pretty much like right here. So it literally so yeah, a little bit of luck. Okay, hold on 1 second, guys. Okay. Hmm. All right, yeah, sorry about that, guys. Just because I got an email. All right, but but yeah. So nonetheless, so let's use all the concepts that we just talked about, right? And let's apply this. Oh, it's not gonna. Let's see. I'm trying to put the rules that we just outlined in here. Let's go to settings. Okay, yeah, it's not gonna load, but whatever. So you guys remember like all the rules that essentially that we outlined, right? Can we anticipate the daily direction? Number one, when I go to the daily time frame, we are inside of OTE, right? From swing high down to swing low, we're above premium, so we're pretty much above 50%. So the market, again, is this going to be the complete reversal? Absolutely, I don't know, right? But all I know is we're at like key levels of resistance, right? Like the market right now is at a premium, so I know on the daily time frame we can expect some sort of retracement. Now that's not enough, right? Because I always say like just because the market's there doesn't mean anything. Now when I posted the setup, right, what I saw was something very simple. We were above prior day highs and we pinned it right here. We pinned the prior day highs going into Asia Open. And then I saw this 1 hour EBP that formed right here. And this 4 hour candle didn't close just yet on that next candle, but it was pretty much about 50 minutes to close. So when I saw this, I'm like, all right, well, this is good enough for me because typically, number one, we're at this fair value gap on the hourly time frame. We're inside of OTE from swing high down to swing low. We have this gap that's all the way down here from the new week. Where on Monday, we have all this trend line liquidity. So I'm like, all right, at the very least, we can at least come back down into Tuesday's, maybe possibly Tuesday's low, or I just use again the rejection block for me at this point, right? And all I need to do was because this is a market structure break, we had the closure on the 1 hour below the low, right? So now all I'm looking for is that potential retracement down into the next liquidity pool target, easy peasy. And then when the 4 hour candle closes, what do we have? We have a fair value gap. Beautiful. Doesn't even give you any drawdown if you wait for a fair value gap. And then boom, off to the races, right? And then from there, we obviously just fade off going into the New York Open. And that's why I said, like, I want to leave a position short just in case because there's a lot of trend line liquidity. We also have this gap to the downside, and we also have the daily fair value gap down in here just in case we went down into that. So, I mean, pretty straightforward play, guys. It's really not that difficult. And it met every requirement, right? Like number one, weekly, daily candle direction. Yes. Where are we on the higher time frame? We're at a premium on side GC futures. Now, do we have a run on stops with a low opposing level not tapped? Yes, we took out the prior day high on gold, right? We took out the prior day high. If we go to the daily time frame, you see a little bit clearer here. We took out the prior day high, and then we had this prior lows and equal lows that were resting because we had all this trend line liquidity. What else? Okay, let me go back to NQ. What was on NQ? All right, and then do we have a 4 hour confirmation? Yes, we had the 4 hour bearish EBP that formed. And then again, we also had the 1 hour EBP that formed as well before the 4 hour candle closed. Now, time of the sub, 7 to 9 p.m. EST, fit that requirement as well. Pretty simple. Where was yeah, it was just after 9 o'clock. But like you get the point. Like this was setting up going into 7 to 9, but the entry didn't really happen. Well, the entry happened right around that time window, but if you waited for a fair value gap to form, on the 1 hour, then yeah. But even then, you could have went down to the 30-minute and just looked for a fair value gap, right? Like if I see an hourly EBP, you go down to 30-minute, 15-minute. There was a clear fair value gap right there. I mean, look at that, beautiful. Like this is the type of stuff that if you can wait, and there was another entry here before we took down that target. If you go to the 30-minute, there's another fair value gap here. So when you get this initial run and we create another fair value gap, that first entry goes to break even. Then you have an opportunity to add if you're someone who's a little bit more high risk. And then look at that beautiful reaction at the rejection block and then push back up. And then now we're seeing that next leg lower that we were kind of anticipating. And that's it. It's very simple. The hard part now is just waiting for those types of plays and opportunities to happen. Like the reason whenever I post a setup, it works fairly well is because I am not trying to like the reason why whenever I post this up, like when NQ longs yesterday, is because I'm waiting for multiple things to kind of come together. So yes, is the frequency going to be a lot less? Of course, but like who cares? I want to be. My goal is as a trader is to keep my stress levels as low as possible, and I don't want to keep putting on trades just for the sake of putting on trades. That's kind of like amateurish. And I know we're all traders. That's why I always advise people, like if you're having issues waiting, but you know what you're waiting for, then you have an issue of boredom or you have an issue of something else. Oh, okay, good that this is here. Oh yeah, and also just talking about it as well. So that I actually completed the YouTube series, which makes me actually pretty happy on these longs yesterday. So both my accounts are just over $4,000 in profit. So you guys are gonna really like that series. I essentially recorded like from getting funded with a $500 budget, starting the challenges, taking the trades, and I'm using pretty much the same stuff I'm talking to you guys about as well. So be on the lookout for that, because that video is going to show you guys the process of actually getting funded, and not only get funded, but get to your first payout. So be on the lookout for that. Yeah, guys, sorry, like my camera died. Yeah, my camera died. If I remove this, I think the audio gets removed too. I'm not like the most stream savvy, so I apologize for that. Forgot to put it in the charger. All right, but I'll answer any questions, and then yeah, I'll kind of hop off because I have to do some, I have to get something done actually for a client. Okay, what about you, Jay? I'm not sure on this. Like again, guys, like if the market starts to consolidate, I don't know why. Like, because some people they have this urge to like if they see the market in consolidation, they want to find a setup on it. Like, bro, um, like like this is just chop, so I'm not going to try to anticipate an expansion move out of chop because right now we're not sitting at any clear levels. We're kind of like, look at this. This price action is disgusting. You know, like if you go to the 4 hour time frame and you see barcode price action, you see, you know, every like one candle has a huge wick up, then the next candle has a huge wick down. One candle's bullish, next candle's bearish, next candle's a doji, next candle's big bullish, then bearish. Then like why would you want to trade in this when you have other better opportunities? Like look at NQ, right? NQ was so much cleaner this week. Like every candle has like a clean trend, a little bit of retracement, liquidity pool sweep, clean push up. You know, like this is much cleaner. Same thing with gold, right? Gold, much cleaner off the week. Straight up, straight up, straight up. Key level, reversal, signal, reversal. You know, like this is cleaner, bro. Versus trying to even like, and don't get me wrong, like gold that sometimes will have choppy price action. Like, you know, gold will go through moments like that as well. But then guess what? When the market goes like this, I'm watching something else. Don't fall in love with this idea that like, oh my God, I had a bias on something and I'm gonna like stick to it no matter what. You know? Um, okay, let me see this. GU looks good for a short 4 hour EBP. I haven't even seen GU honestly all week. Let's see. 4 hour EBP. Did it take out the candle bar high? I think so. Yeah. This one was nicer though. I like these ones because now you can target the fair value gap and this prior high. The thing is this, when you get an EBP like over here, you can still take that trade, but now you're kind of running into this potential support, right? Where the market has swing low, swing high. If you draw the fib out, you're kind of sitting at a discount. So again, doesn't mean that the market can't continue lower, but like when you have something like this, I like these better. When we have a huge like move above clear liquidity and then a 4 hour ABP, then the next candle you just look to target maybe this high or this imbalance point, right? This imbalance is huge. So like I want you guys to notice that difference between this one and this one. How much is 25K in Apex Trader? Please brief us. Yeah, I'm going to have a separate video on Apex coming out this Friday. So I have an educational video for you guys tomorrow, and then have a video breaking down Apex. And if you Apex, this is what I will say about Apex. Apex is for people who want to go for like big payouts, right? And who have more of a scalping style. Um, Straight up. And the reason being is because you can have like 10 accounts straight up with Apex, and they're fairly cheap, man. Like especially like, although I think the 90% is off yesterday, but bro, you could have bought 10 accounts for 200 bucks. Now you do have to pay an activation fee, right? But again, you only pay that after you pass. So there's a little bit of like I'd rather just buy a bunch of challenges, take them full port or maybe not full port, because bro, each account is 20 bucks, you know. And the thing is, like, once you pass, then you pay the activation fee versus like paying the full upfront price. And that, like, there's pros and cons to it. Now, don't get me wrong, Apex does have some cons, when it comes to like, um, the daily trailing drawdown. But bro, if you can get past that daily trailing drawdown, like that is like the goal. Because if you get past that trailing drawdown, now it becomes like you're trading a regular account. And then the leverage Apex has is still by far the best. No other firm is going to allow you to have that many accounts. That's so I'll make that briefing and the rules with Apex on a video coming up this Friday. Hold on, guys. Give me 2 minutes. My bad, guys. Give me 2 minutes. Sorry, guys. All right, guys. Yeah, my bad. But yeah, so yeah, I'll kind of have that video out about Apex as well. But I do think like again, if you're someone who wants to go for like bigger payouts, it's probably the better solution. To be fair, this was a nice reaction here on the 15 minute. It sucks. That's the thing about trading in Asia. If you hold the trade during London, I usually end up sleeping in, and this was like beautiful, man. Like fair value gap, and the thing that I like about it the most is like look at all this trendline liquidity, right? Like there's barely any runs on stop lower. Like it's just nice, clean. Then you get that big impulse push up. Um, Hey, bro, I'm coming from Forex to futures on props. Do you recommend full porting these challenges to get funded since the prices are way cheaper? I'll say this, man. Well, some of them you can't even really full port. Like for example, like the one that I showed you guys, this account, they have a 40% consistency rule on the challenge, but then there's no consistency rule once you're funded. So I personally prefer the ones that don't have consistency rules on the funded stage because I like again, imagine like you take like imagine today you catch gold shorts in Asia and then you call NQ longs in New York. You're gonna have a massive trading day, right? Especially if you executed pretty well. So what I would suggest is go with a firm if you're someone who trades higher time frame bias with one that doesn't have consistency rules on the eval. Now, if they don't have a consistency rule, and I haven't seen a firm like this, if they don't have any consistency rule, I think my fund of futures doesn't have a consistency rule on both the eval and that, but then it becomes more expensive because you have to purchase it as an add-on. So then I think it's like almost like 189 or like I think it's like what like just around $200 on my fund of futures if I'm not mistaken. And I have a full I want to create a full guide for you guys as well when it comes to this. Because if it's like a 200 now it's like you can full port it if you want and you have the budget. And that's ultimately what it's going to depend on. If you have, let's just say, roughly, like let's say $1,000 to of disposable income in order to be able to purchase challenges, then you pretty much, if you then you could essentially buy this account 5 times. So then, if you like your odds of full porting, you could do that because then you'll get funded. And if you take the evals like 5 times, and there's no consistency rule, guess what? And even if you only pass twice, you can recoup that $1,000 investment fairly quick. But you also have to be careful because with futures props, the thing is this: with futures props, there's a payout cap. So, for example, if you're up like $5,000, some firms only allow you to withdraw up to 50 to 60%, right? Top step is 50% as an example. So like you're not really making much comparatively speaking versus if you made 5,000 on a CFD firm. That's why if you, in my opinion, you could just do both. I like both, right? CFD firms, if you make 5,000 bucks, even though they're more expensive on the challenge, you keep 4 grand. So you pretty much make 100% return comparatively speaking. Futures, bro, like futures, the thing is this, you have to have multiple accounts for it to make sense. Like you need five, I would say 5 accounts minimum on futures for it to make sense. Because then if you do like 5,000 bucks and you withdraw on across the 5 accounts, now you're up like $12,500, in payouts, which is pretty nice. So the game with futures genuinely, you just have to like kind of stack up the accounts. So it depends. Again, if you have the budget, I always tell people if you have the budget and there's no consistency rule, yeah, like feel free to like full port it. I know it's not like the most, but I just like to be honest with people. That's what a lot of people do. They just full port the challenge. To be fair, like this one on Funded Next Futures, I didn't because I was doing the whole YouTube series for it. But I'll be honest, like if I wasn't, I'd probably well, you can't even full port it because of the consistency rule. So, but if they didn't have a consistency rule, then yeah, I would have been full porting. Nah, man, like I'm not watching. Honestly, FX, bro, is like I don't really like FX anymore, man. And there's nothing wrong with it. Like, don't get me wrong, I'm still gonna watch it, especially like dollar yen during Asia session. Usually, like has good plays. But bro, like NQ, like look at these clean moves, man. Like it's not a headache. And don't get me wrong, when NQ becomes a headache, I'm gonna watch Euro. I'm gonna watch these other assets, right? And right, yeah, as we see right now, we're coming up into that rejection block. Now, a lot of times people will tell me like, oh, like if you think the market is gonna go one way, why don't you look for trades? And I think this is a very important lesson. It's also dependent on your mental. Like right now, man, like I'm feeling sick. I'm feeling tired. Went to sleep like at 3 o'clock. I have stuff that I gotta do for clients in a little bit, um, outside of trading. So it's like, yeah, it's just I don't feel like taking a trade, and my whole day is kind of ruined. Especially when I caught a very nice trade on gold on multiple accounts. So like that's the only reason why it's like sometimes what I have stuff I gotta do for the day because we've all been there, right? Like we've all been there where we get into a trade and our whole day is now like going to be affected by this trade, even though this one kind of just came in, nice 15-minute EBP, and then just straight higher. But it's fine, man. There's like you guys see, there's so many opportunities every single day. I don't get FOMO anymore. But yeah, going back to your thing about watching EU, like I don't see anything on it right now. I just think it's consolidating. I'm still leaning bullish, but the thing is, we did have this daily bearish EBP, but we did take out the low now, right? So now I need to see a bullish setup on the daily time frame because right now I'm not trying to fade this, right? So am I going to be looking for buys right now? No, maybe I'll look for buys tomorrow. Tomorrow doesn't mean that's the thing. It's not ready right now. Like I'm not in the business of trying to like say, oh, well, this is going to be the low, and then we're going to rip higher. No, let the low confirm. Let me get a bullish setup, and even if I get a bullish setup over here, right? Like let's say the market does something like that, consolidates, and we break higher. We have a fair value gap, and we confirm. Guess what, bro? I'll just take the entry here. I don't need to buy the low. I think a lot of people. What happens is like when the market isn't ready, they're scared that they're going to miss the trade. Like, trust me, man. If you miss the trade, there's going to be another one. That's kind of how like I think about it. It's just yeah, it doesn't really make a difference to me. But right now it's not ready. Right now it's just going to be a headache if you try to like find a buying opportunity in here because it's just consolidating. Yeah, look at that, beautiful, man. You always love like when the markets are like very like giving good opportunities. All right. Yeah, my bad, guys. The thing, my battery died on this. Let me actually see. I was putting the charger again. Maybe it would charge a little bit. Oh no, I didn't even fucking do that. Yeah, the charge battery died. I actually forgot to put it in the charger, so but yeah. Um Yeah, so the entry on GC was pretty simple, pretty straightforward. Um, it was essentially when I posted it, right? When I posted it, I think I was like around 45.86. But essentially what I wanted to see is just this prior low retest. Right? This is a breaker because we have a swing high, swing low, the market took out prior day high, and then we formed this hourly EBP, right? So now that we formed the hourly EBP, when I go down to 30-minute and 15-minute, right, we see a fair value gap. Let's go to 30 minutes, a little bit more clear on the 30-minute. We have this fair value gap. So we have a breaker with a fair value gap. And then the 4 hour, at this moment, the market had closed on the 4 hour candle. So the next candle is at 22. So 22 right there. So that 4 hour bar opened up on this candle right here. So we opened, rallied into that. So if you waited for the 4 hour closure, that's fine. I got in before that on this candle right here, like about 15 minutes beforehand. I'm like, all right, it's 15 minutes left. We're probably gonna close as an EBP, right? And then the stop loss is typically going to be candle. When I have a really big candle like this, right? On the fair value gap, I usually just put it like, you see how this candle bar is low is here. I usually do not want to see the market push too high up above here. So I usually put it, I don't put my stop loss there. I put it like right around like here. So give it some room in case we spike up. But like the thing is, if we have the spike up and then we close above this low, and we kind of invert the fair value gap, it's just like, I don't want to be in that trade anymore. I'd rather just take the loss. And some people say, well, what if it came back all the way up here? It still would have been technically valid on the 4 hour. Yes, but like, bro, like I don't want to fight this fair value gap if it gets inverted, right? Because if this pushes up and we have a closure above, you know, the probability is just less likely over time. And then not only that, but the risk to reward is much higher. So if I get in like around here, stop loss is around there, and I'm targeting that rejection block, right? It's a 3R move, just under 3R. Now, if I put it up here, it's 1.74. So like over time, it's fine because over time, like if I take the same trades the same way, yes, will some wick me out? Of course, but it's not going to be as much as you think. Thank you for your support. I bought Apex 20, 50K accounts just using a code train. I passed all 20 today. Yeah, I appreciate that, man. And yo, good stuff, man. Good stuff. Now just be patient with them, and then, bro, 20 accounts. And this is my recommendation, but you could do whatever you want, of course. My recommendation is this, right? Because when I was trading with Apex at the beginning of the summertime, right? If you have like, let's say, well, I never had 20 accounts, but I had like about, I think, 8 at the time, and I split them up. So what you want to do is like just split them up if you can into different groups, because on Tradevate you can do this. So instead of like putting all 20 on one, you could just have like 5 subsets of like 4. So 5 accounts on 4. So you'll pretty much have 4 accounts theoretically, right? So you have, like, let's say trade copier 1, 2, 3, and 4, right? Each account has like 5 accounts. No, I'm sorry. I think I messed up the math. So if you have 20 accounts, right, you can have like a group of like 4. Yes, okay, so a group of 4, which each of them has 5 accounts that are copied on them, right? So then that way, it's not too much pressure to put them all on one copier. But you still have like 5 accounts, right? Even if like, let's say, each group does pretty well, like it'll compound over time and it's just less stress. So again, obviously do what you want, um, but yeah, that's kind of like how I kind of like break down with prop firms in general. Yeah, Cameron. So I have a full video on this coming out Friday. So Friday is going to be specifically for Apex. Um, and then tomorrow's video on YouTube is going to be on my main channel. It's going to be about like, the strategies I'm using for 2026. And then I'm going to have the video coming out on Friday about how to trade with like Apex. And then I'll make one more broad because again, every futures firm is different. Now, to be fair, a lot of them are now implementing pretty much the same stuff or the same types of challenges. Um, so yeah, but the Apex video specifically will come on there, and I want to educate you guys on the futures props. And so then it's up to you to make that decision. Do you want to trade with futures props? Do you want to trade with CFDs? Pros, cons of every single format, and also like maybe some people prefer their own personal capital because they don't want to they don't want to waste time trading on the challenge. So yeah, guys, like there's so many different ways to go about it. So I'll have that video out probably sometime next week, but Friday will be on the Apex video. Not really, man, because you have to remember, like everyone trades very similar strategies in some lens, right? But like it's not like every single person's entry is going to be the same every single time. You know what I mean? So I wouldn't worry about that. All right, I'm gonna answer like the last few questions, and then I gotta get out of here. Okay, this is a good question. Um, okay, well, let me go here first. So honestly, I do have a Discord that I just haven't like posted. But the Discord, I'm probably gonna make a public Discord where we can have like discourse and conversations. I don't know yet. Don't quote me on that because the problem with that, the reason why I like Telegram the way it is set up on Discord, you always have people messaging because in Discord you can see the members and then people message them and then they like pretend to be me and there's a bunch of scammers on Discord. It's super annoying and there's no way to combat that. That's the reason being. That's the only reason why I use Telegram where it's like you can't bother any members in there. Right. And I understand like obviously like when you have a Discord, people can engage and talk. That's the benefit of it, but the con of it is that. So that's the reason why I'm kind of like going about it like that. But yeah. All right. But this is a good question. Like if you see NQ trading higher and ES trading lower, like what do you do? The thing is this, man. This is why I don't like trading at the highs because look what happens, right? And NQ, this is also why I say, like, look at the rejection blocks. If you're holding for that low, I'm telling you guys, if you just change this one thing, you'll avoid headaches. Like you could have gotten out of the rejection blocks. The highest rejection blocks is just the bodies of the highest point, right? So you see all these wicks, the bodies of the candles here, it could be your objective and your target. You don't have to hold for the highs or the wicks, right? Because look at that rejection. Now, to answer your question, to be honest, man, it really depends. Like if I'm very bullish on NQ, for example, and I don't see, um, and we're not at an extreme point, right? Because like I said, like I don't like buying up here only because like you have to deal with potential pullbacks or the market just might consolidate for a little bit, right? When you start to have like multiple bullish days higher, you got a key like resistance, etc. So what I personally do is like I don't really care too much about what ES is doing. And I know that doesn't sound like what most people say, but the reality is like if I'm bullish on NQ and there's room to run to the upside, I'm going to ignore what's happening on ES in that specific situation. It's a case by case basis, but like again, like for example, would I ignore it now? No, because we're at a resistance and we have SMT. Like ES took out the high, NQ didn't. So now this is not like if am I going to look for continuation longs now? No. Even if I do get a nice bullish setup, like even though this did offer one opportunity to make it to the upside, now, the reason why sometimes it's like difficult because maybe at the end of the day, maybe this next 4 hour bar just pushes through and then we catch up to ES, right? And then we make new all-time highs. So like you kind of have a cracking correlation in that sense at the current moment, but this could easily flip, right? Like in the next 3 hours going into the PM session, NQ could catch up and then push to new highs. So you could have now it's dependent on your rule sets. You can tell yourself, hey, if they're not correlated, I am not going to take a trade, right? It's going to be up to you how, but you have to approach every situation the same. You can't keep switching over. So for me, if I'm bullish on NQ, um, I'm typically just going to keep looking for buys until I see a bearish, some sort of bearish setup or bearish, I don't want to say bearish setup, but some sort of like bearish price action, right? Like if I see this, a 15-minute EBP after hitting this rejection block, I'm going to be a little bit cautious of playing longs now, right? Because we're at a resistance. This could still rip higher, of course, but again, we're playing probabilities. Okay, I'm going to answer this last question because it's like a technical one, and then I'll kind of end it on this note. So when you trade EBP on daily, weekly, if price sweeps the DOL, you said you are no longer interested in looking for a trade. Is that the same for 4 hour? If price sweeps the 4 hour EBP DOL, you still take? Yeah. So yeah, that's a great question. So I'll end it off on this. So what he's essentially asking is on the DOL is essentially the candle bar high or low. So let's look at gold for example, right? We had the candle bar low that was not traded down into, and Actually, you know what? Let me do the hourly time frame because the hourly time frame is a better indication of this, right? So even though we had this hourly EBP before this 4-hour bar closed, I know this one closes an EBP, but it's the same concept. If I see that if I see that the market took out the bar low, but then we retrace into a fair value gap, I'll still take it as long as there's downside liquidity on a bigger perspective, right? That's why the DOL is really, I just use it for like people who are like beginning because it gives you a clear, easy target. Like imagine you have this 4-hour EBP, you get the retracement first, right, in here, and then you could target that 4-hour EBP candle bars low, which is here, right? This is easy. This is beginner friendly. Now, someone who understands a little bit more about market structure, who has a little bit more experience, they can just run the trade down. Like they might, okay, because this 4-hour EBP just might be the start of, let's just say, a big run lower to clear out all these lows, right? Like we took out this low, filled in some of this fair value gap that hasn't been filled yet, right? So we came into here. So like you can just run the trade, even if like let's just say we took out the 4-hour bar low, right? You can still run the trade down in here. Now, obviously, this one specifically is not like the clearest. I mean, no, it is. I'm sorry, because look at the daily, because we also have the fair value gap on the daily time frame. So when you're seeing that rejection, you see the daily fair value gap, you can just target that. So even in this case, we did get the retracement first, but even if we took out the low and when the daily fair value gap was still present, you can still look for that fair value gap on the hourly time frame. Excuse me, like in here to look for a short. So again, like I'll still take the trade even if it took out the candle bars low because I'm looking at it from the lens of, hey, this is a bigger potential move. Let me see if I can find another example of this. Okay, like for example, look at this NQ on the 4-hour time frame yesterday, Monday, right? Like let's say you were someone who's bullish. The market, so the 6 o'clock candle, let's go ahead and do that. The 6 o'clock candle was here. So we took out the DOL. Look, we took out the DOL going into the next candle, and then we came into that fair value gap on that 4-hour bar, right? On like after we took out the DOL. So the 6 o'clock, so the 4-hour bar EBP candle is here. That's the 6 o'clock high. We took it out, right? But then again, it depends. If you're still bullish, like imagine you were bullish, forget like looking for a bearish bias. If you were bullish on a specific day, you can still just trade this normally because the DOL is up here, right? Like let's say you have like a daily fair value gap that's up here, the 4-hour showing strong bullish structure, etc. Like even if it takes out the high of the 4-hour EBP candle, you could still trade the retracement back down and then still look for the upside move as long as there's room to run, to a clear target. So that's how I would kind of do it. The DOL, like where you just target the EBP candle high or low, that's just beginner status for someone who just to get like clean plays, easy targets, etc. Because the thing is this, when you look for a target, you have to understand a little bit more of market structure and there's more variables that come into it. So yeah, hopefully that makes sense, man. Uh, but yeah, I appreciate it guys for hopping on. Again, as always, man, like the reason why I don't like these streams sometimes, in terms of like waiting for trading opportunities is because when the opportunities come, I'm just going to just post them in Telegram, right? Versus because again, it takes a while. This one was nice, man. This one I will say, close above here. We retested that 15-minute gap. It's just that was so high up in price. And this is what goes back to Kanal's point. Before I end this, going back to yeah, no problem, bro. But going back to Kanal's point, like, bro, this is what I mean. Like sometimes ES is up to new highs, but then NQ can just catch up to it. Now again, it hasn't caught up to it yet. The high is up here, right? And maybe we don't catch up, but like this is why sometimes I'll just focus on NQ. If NQ is bullish and ES is like consolidating and doing some bullshit, if NQ still has the setup, I'm still going to take it for the most part, unless I get some sort of like, again, bearish price action like this right here. Even though, again, I want to show you guys, sometimes I'll get something like this. The market just rips to new highs anyways, right? Like for me, it doesn't matter because I'm looking for like clean price action where the probabilities are in my favor over time. But yeah, guys, appreciate it. And yeah, if I see anything else, I'll setting up maybe in the PM session. I'll post it in Telegram as usual. But be on the lookout because tomorrow's video is going to be the setup I'm going to be trading for 2026. It's going to be a full guide. It's about 20 minutes long or so. So it's a little bit longer video, but I think it'll be worth it. So yeah, see you guys tomorrow on that premiere.